Hey, Bulls and Bears, you're watching Bull Boom Bear Bust. What is today? It is Tuesday. The holiday yesterday threw me off. Yesterday was President's Day. Today's Tuesday, February 21st, 2023. Back with another dose of economic reality. So things are shaping up just like we expected. We knew that at some point the market was going to react to reality, economic reality. That's why we say we're back with another dose of economic reality. Up until now, the markets have not factored in economic reality. They based or they factored in a false assumption that inflation was under control, that the consumer is strong, that people have tons of money, that spending is just going to continue. So we see today the Dow Jones down over 2%. That's almost a 700-point loss. We see the NASDAQ down 2.5%, even a bigger loss there. Almost 3% for the Russell 2000, another 2% off of the S&P 500. And what's being reported is the markets are spooked by one, inflation, and rate worries, worrying that the Fed is not going to drop rates sooner, or worried they're not going to at least start cutting back on the frequency of the rate hikes, right? So it's all about rates. It's all about the debt markets. Also, we see the 10-year bond yield is rising. So we're getting closer now to that 4% number. And we know that's not good for the markets either, because this is all based on debt, right? So when big companies, investment houses, they can go out and borrow money for dirt cheap. They go and they buy up the markets. And when money is not as cheap, it doesn't happen as much, right? So pretty simple. Also, retail earnings misses are another piece of the puzzle, or is why we're being told the market's sold off, right? But all this was expected. Obviously, we're going to see more earnings misses as we progress into the year, because the consumer is either one, living paycheck to paycheck for the most part, about 70% of people. The surveys range between 60 to 70%. More closer to 70%. So I basically rounded up. It's about 70% living paycheck to paycheck. That changed in 2020. People had a lot of money in 2020 thrown at them, and also bills were lessened or stopped. So people did get a lot of savings accumulated or saved up from 2020 going forward. But now, only here a few years later, we're back to where we started at before the health crisis. And we're back to financial crisis levels, but not too many outlets are reporting on that. It's very strange that they wouldn't be reporting on that, because that's very important, especially because the consumer is the driver of the U.S. economy. So obviously the stock market's going to face reality at some point. It's just a matter of when. And I've said here for over a year now that we're not going to breach or exceed the highs that we saw at the end of 2021 going into 2022. Those were the highs, and I don't think we're going to pass those up again. I think we're going to continue to see a downward trend. Walmart CFO, there is considerable pressure on the consumer. That just came out today. Walmart CFO, considerable pressure on the consumer. In other words, people are living paycheck to paycheck. The world is finally waking up to that reality. How long have we known that here? We've known that for a while. 2020 was a little bit of a change because what happened that year, and all the money thrown out there, and the forgiveness programs, and the stoppage of the late fees, and all the, you guys know all this. But we're back where we were, and we are going to continue down this path of an economic collapse, a slow motion collapse, with the consumer getting tapped out. Inflation is going to continue to get worse, and there's a lot of things happening in the world right now, and in our country here also, but across the world. And every day I have to sit here and think about how wide I want to report this, right? So we have contamination, spills, our environment that's turning into a toxic wasteland, destruction of production. We have, farms being destroyed or put out financially or put down financially. And there's a lot of things happening from the production side, outsourcing, less production here, more outsourcing. That's the loss of jobs. How wide do we want to look at this, or do we want to just stick with the markets, right? So every day I challenge myself to try to be as detailed as possible, but yet don't go too wide. I don't want to start going off into the whole, I'm trying to think of the word to use here, the whole destruction of our food supply. We can really go on for a long time about that, but this is a financial channel, it's best to focus on how to navigate it. We can't control what's happening with the politics behind the destruction of our food supply, but we can figure out how to best navigate it and how to invest against this and how to protect ourselves. Now, the Walmart CEO said the following: U.S. consumers are increasingly squeezed by inflation, opting to buy necessities over discretionary items. All right, we all knew that was happening. He continues, while the supply chain issues have largely abated, prices are still high and there's considerable pressure on the consumer. So yeah, a lot of people thought that when the supply chains opened back up, when things got back to sort of normal, that the cost of living was going to come down, prices were going to come down. We are seeing lower prices on some consumer products and items, but the cost of living is a lot more than buying toasters at Walmart. It's energy is the big one. What people don't add in, I think a lot, is insurance. That's a big one. Rents, that's a big one. I mean, if they would factor all the things that we have to pay for into the consumer price index, I think you would see it double or triple of what we're being told. We're told it's mid 6% range. All right, so I'm actually looking right at it here. It's just under 15%, so more than double of the 6-something% that we're told, but not quite triple. But obviously, a lot more than what is being reported on for most business news networks anyway. All right, let's touch briefly on the housing market. The housing market just posted another monthly drop. U.S. home sales post 12th straight monthly drop. And this was something that was going to be, the housing market was supposedly turning around because we saw lower mortgage rates, and they were trying to tell us that there's going to be a new increase in home prices, that the market was reversing and recovering again. But we see that the sales are continuing to fall off a cliff. Why? Because the higher rates, people don't have enough money to qualify. And even if they did, I think a lot of people are scared right now to jump into the housing market. Also, investment firms are backing away from the housing market. We see about a 50% drop as of the last quarter there, fourth quarter 2022, a 50% drop off in the number of investors buying properties. So there's obviously taking a wait and see approach, because when most of your renters are either broke or going broke, is it a good idea to invest in real estate right now? Wow. National Association of Realtors reported showing the smallest increase in house prices since 2012. Now they're looking at the year-over-year number. Let's see what else here. All right, so more weakness there. People cannot stand even the mortgage rates that we're at right now. And what if they go higher? When you look at the 10-year bond yield that we just talked about at the beginning of this video, that points to higher mortgage rates. So we'll likely see 7% again if this persists, if this rate of increase persists. And then from there, we'll see what happens. But it's all about the debt market. It's all about the bond market. That determines where rates are. And when the Fed's buying everything under the sun, it makes rates artificially low. Now we're seeing a little bit less of that, and they're being very careful on not letting this yield spike. Now, obviously, if we see the yield spike, then something broke or something happens to where their policy has completely changed and they no longer want to see a slow motion collapse. In that case, it's going to be a fast motion collapse. But let's talk about another story that I was reading earlier. Another big layoff, another big announcement. McKinsey & Company, 2,000 jobs in one of the biggest layoffs for that company. And this is the theme that we're seeing almost every day, another huge layoff announcement. And oftentimes it's listed or reported as one of the biggest layoffs ever from the company or amongst the biggest layoffs. So if things were doing so well right now with the economy, why are we seeing these layoffs that are much bigger? Now, people often say, there's layoffs all the time, you're exaggerating, things are not that bad. Well, why are the layoffs either the biggest or amongst the biggest layoffs? Pretty much every few days we see a huge layoff, and it's usually one of the bigger or the biggest layoff that the company's ever seen, right? So something is broken and things are not headed in a good direction for this economy. Now, can you make it through this? Absolutely, if you're prepared for it. This could be one of the best times to make money that we've seen in a very long time, since the financial crisis. I happen to be dipping my toes right now into some crypto. I think there's a very good chance we're going to see a bigger drop in crypto, a big dump, because the SEC is really coming after cryptos right now. That's why I'm not going in very heavy on these cryptos. But when we do see even the bigger drop than we've already seen, that's when I'll be going in a little more heavy-handed. So I'm being very cautious right now with investing in both stocks and cryptos. Still stacking silver. If silver gets beat down again and gets dropped down again because of the price suppression, I'll go ahead and add more. And that's what I'm doing. I'm just playing it very carefully and just kind of taking a wait and see, grab the popcorn, sit and watch the show, and hopefully everybody's well. But keep stacking as usual, and we'll be back with more reports here. Please let me know what you think about the layoff announcement, the jump in the bond yields, the sell-off on the market today. The market's finally seeing economic reality with higher rates down the road, the higher cost of living, the consumer being tapped out. Even Walmart, the CFO now is out there giving us the real deal and the real story behind that. So that's what it's going to be, folks. We'll see everybody very, very soon. Thanks for watching this report. Big love. Bye for now. Keep stacking. Peace.